Alright, so I think a great pattern to start off with is the double bottom pattern. This right here is a bullish reversal pattern, which means that the price is going down before the pattern appears, and the goal with this pattern is to reverse the price to the upside. So to identify the double bottom, you first need to identify a downtrend. This is when we are printing both lower highs and also lower lows. After the move towards the downside, what you're looking out for here is two lows which are at around the same level. These two lows doesn't have to be on the exact same level, but they should be roughly at the same price. What we usually do here is that we drag a horizontal line between the two lows, and we also want to draw a horizontal line connecting the high here in between the two low points. This move right here, the first move down after the pattern has appeared, is also significant. So now let's take a look at how do we trade this pattern. Well, first of all, you can see that this is a double bottom because we had a move towards the downside. We saw one and two lows at the same level, and then a reversal towards the upside. The most common entry point is to enter on the candle that breaks above the line defined by the high in between these two low points. However, I actually have another entry point that I personally prefer many times, but first take a look at the strategy for entering the breakout. So your entry would be where this candlestick close, so at the high of the close right here. If you enter at that point, the most common place to set your stop loss is to set it just below the lowest point of the double bottom. And if you don't know, the stop loss is where you will automatically sell if the price goes down to this point. As for your target level, what I usually recommend here is to target a risk to reward ratio of 1 to 2 or more. And what I mean with this is that the distance from your entry point to your target should be more than twice as long as your distance down here to your stop loss, which would make your profit target around here. So that is one simple strategy. However, another strategy that I personally really like is to enter at the candle that just slightly dips below the low created by the first bounce. What you can then do is that you can enter on the candle close of that move. And one thing to notice is that you will not always see the price dip below the line created by this point. Many times the price will reverse just slightly above, and then this is not as good of a strategy. But when the price wicks below this line right here, I personally like this type of entry. For this type of entry, I would also place my stop loss just below the lowest point of that candle. And using a risk to reward ratio of 2, perhaps our profit target would be here. So this right here is a much quicker strategy. Our goal here is to get in and out quickly and make some quick profits. Another potential entry is that many times after the price breaks this point right here, the price will pull back. So another entry point is to enter on that pullback. However, in this example, the price broke this level and never looked back. But many times you will see a pullback, and that can also be a great entry point. I will talk about that entry very soon when we talk about the double top strategy. And you may wonder, what is the psychology behind the double bottom? Well, it's pretty simple, because before the pattern appeared, we had a downtrend. And when we see a low, another low, and then when we break this high right here, the downtrend is terminated, and that is where the buying opportunity comes from. So now guys, we are ready to take a look at the double top pattern. And later when we take a look at the double top strategy, we will look at the entry type I talked about earlier in the course. But first, let's take a look at how we identify the double top. So as always, the first thing we want to do is that we want to take a look at the direction and the type. So in this case, we have a bearish reversal. So before the pattern appears, we want to see the price going up. Then this red part right here is the actual pattern. And after the pattern, we want to see the price going down. And compared to the double bottom, I made this example a bit more messy. And that is because in real markets, you will seldom have, perfect looking patterns. Most of the times the patterns will look more something like this, a little bit more messy. But the same principle here applies. So for the double top, the price is pushing higher, but then at one point we find two tops here at the around same level, indicating that the price is struggling to push higher. What we usually do here is to drag a line here in between the two highs. And what I want to show you guys with this example is that sometimes the price will push quickly above the high before the reversal. And what you also can see here is that in real markets, we will sometimes have sort of multiple minor lows in between the highs. So it's important that you drag your other horizontal line at the lowest low in between the highs here. So now let's take a look at this pattern in action in a real market. So you can see in this example, we had the price pushing up, we got rejected one time, and then we got rejected one time again. This was actually almost like a triple top, so we almost had 3 small reactions here. And when we talked about the double bottom, we already mentioned this type of entry when you can enter at the resistance. We also talked about the entry where you can enter at the break below the line. So for this pattern, I want to focus on this type of entry right here. And this one can be a little bit tricky to understand, especially for beginners. But essentially what we're looking out for here is that, first of all, this strong bearish candle right here broke below the low. So this right here is a common point to enter. But an excellent entry point can actually be to wait for the price to pull back, or in other words, move against the direction of the breakout move and then enter at the pullback. So in this case, the entry would be right here. And to make this example more clear, let me actually show you guys how this would look like in a textbook. So in a textbook, let's say we have a clear, very super clear double top like this. And in a textbook, the pattern will usually look like this, right? You will see the price going up to the exact same point and test the previous support as resistance. But you can see that in real markets, many times, like it did right here, it actually pushed above this middle line. And this is super common, and this is why you should not be too focused on these sort of perfect patterns that you see in textbooks. It's fine to see the price pushing above this middle line, but what we want to see in order to confirm the entry is a small move here towards the downside. So entry right here. You may of course wonder, where do we place our stop loss? Well, for this type of entry point, I think the stop loss is very clear. Usually you will set the stop above the highest point of the pullback. So in other words, you want to set the stop loss above this point right here. And if you target a 2-to-1 risk to reward ratio, your target would be somewhere around here. And for the double top, you can also use the strategies we talked about earlier in the course when we talked about the double bottom. Alright, so this video was just a short clip from our full chart patterns trading course. So if you liked what you saw and want to dive deeper into chart patterns, make sure to click or tap on the video right here.